Hopefully you're having a great day today. In this video, we're going to be going over the top AI stocks, some data center stocks. Throw, it was a little bit locked up today. Wasn't feeling too hot this morning. How many of you guys are doing good today? Would love to hear it. What are you guys feeling today? Everybody doing okay? It's a Friday here, kind of looking at the market. And let's go. We're going to get into some stocks here that are moving right now that we want to have a close eye on. So one of the things we'll be following today is we're really going to look for kind of the data center movements, and we're going to look at the AI companies that are moving right now, and maybe even touch a little bit on some of the quantum tech. Saw a little bit of a dip here at market open on some of the companies, so we'll jump right in. Kenneth, thanks for joining us. I see Saul in here. Thanks, Johnny, for tuning in. Johnny says he made a killing off of Wolf stock today. WULF, that stock is, not WOLF, which WLF is more solid, I'd say. Excellent. So I'm glad you had a good day, Johnny. Everybody else doing okay? How is everybody doing on this Friday? Let's kind of jump in. So BigBear.ai was one of the stocks we wanted to go over. I want to touch on definitely APLD, as they did have a little bit of a correction today. We see Tesla stock have a sell-off there. So far, the market's still open. We'll see how things kind of end up. Let's start it off with APLD. So APLD is a company that builds data centers for some of the top tech companies, and they're down about 3% today from their highs of about $15.85. I wonder if we had any drawings here. We do. So we had a previous drawing here for really this consolidation from left to right. We've traded them quite a bit. We're in them for a long time. We love to trade the stock as they're a data center company specializing in building data centers for some of the top tech companies in the world. Almost every tech company in their earnings over the past few years have said that they're investing more in AI. And this is one of those companies that is building and constructing these liquid cooling / scalable / minimized carbon footprint enabled data centers. And they are pretty good at it. Seems like they're getting some good deals with Coreweave, for example. That was a over $7 billion deal. And they are also using some infrastructure like wind turbines and other sustainable strategies. They're working with Supermicro Computer and some others. So we've been watching some of the insights on their data center solutions, what they do, and kind of how they're constructing these data centers. And it's been a top data center company we've been following. Now, we have some positions in them where we actually entered them. How many of you guys saw that they made a really big move here recently, not only around earnings, but we saw them make this $3 run earlier this summer up into about $15 a share. That was a 272% run. And luckily, you know, as we're covering it, we've been covering it through that entire run. In fact, we started covering it, I think it was back here early in the year, somewhere in here around $5-6 a share. And so it's been great that we've been able to get some insights for you. If you guys enjoy the insights, we got different ticker symbols, comment them down below as we could jump into them. Now, what we're looking at here for APLD, they made that 270% swing. They now kind of pulled back down to this level, and we were looking at this resistance level at about $14 a share, or $13.50 looks like. And they recently made a really nice move we were able to capitalize on. Looks like this is how we were kind of looking at it. So in their last move, they were down here and we were looking for a buy. So we ended up getting in on APLD, and we got a position there right now up about 49% just over the last month or so. And how we're able to, you know, catch that move, it was kind of just this swing right here. You see this big, this was right after the Coreweave deal, and they kind of corrected and got that surge up. And now we see them shoot up to $15 a share before selling back down to about $13.50. So there's now this new level of resistance acting as a support. So a lot of times, you know, previous resistance here is going to act as a support, and that's kind of what we see. So again, see that previous resistance level at around $13 a share. Take a step back here, kind of see that previous resistance, and it's kind of potentially acting as a support here as it's sold down. And so what we're looking for now is we've been watching this swing here, kind of seeing this potential continuation up into that $15 range. Now we'll watch greater market conditions as they're now trying to use a previous resistance as a support. That's more of a bullish momentum, which is great. It's also one that we got to watch closely here around that $13.50 range. We saw them pull back as low as $13.50 today at market open before recovering up to about $14.16 by midday. And right now, while we'd like to see that swing back up into the $15 range, those highs, excuse me, there is also this kind of trend happening on the near term. So we're kind of watching this right here, where they are inside of this consolidation, having a trend where they've recently sold down. It's totally normal, and this could be the bottom of it. And we see them kind of break out above that $14.50. But right now, holding at $14, they're kind of at this lowering resistance level around $14.25, where if they can't break above $14.25, next level is down into that $13.50 once again. So kind of watching that $14.25, seeing if they can continue that trend and break out above $14.25. If they do, as of today, August 15th, and we see that move, we'd kind of be looking for something like this, kind of that swing back up into that $15 and 30-cent range, or $15.50, which would be that 10% swing that we're kind of looking for on APLD. So right now, not adding anything to the short-term positions, but we love the long-term, again, as we've been able to make about 49% since entry there on APLD. Now, there's some good stuff I've been seeing on APLD. One of the things that we really have focused on too is like their recent deals. The financials have really been good from a cash perspective. They've seen some more cash influx, but their revenue was down just a little bit. Net income was a little negative, nothing crazy. Really, a lot of it is this anticipation of what was I think it's a $7 billion deal. Now I think it's even higher. So if I kind of search, Coreweave and APLD, let's see if there's any updates on the contract. Originally, it was a $7 billion contract. Now it's a $11 billion deal. And so as of now, it seems that this would be a really good indication for APLD. Now, the other thing that happens is in order for Coreweave to pay APLD, they were an investor in the stock. They ended up selling some APLD stock, a pretty large portion of it, which ended up correcting the stock down. And then after that, they basically told them, we're going to go bigger. We're going to go for 11 billion on the on the investment for the data center build out in North Dakota. So for those of you guys not familiar with that deal, basically they're building for this AI company Coreweave. They're building this data center here, or multiple data centers. It's approximately a 15-year lease agreement with what is about $11 billion on the table for this. They're building in North Dakota because it's cold. They're building it sustainably because that's what you got to do nowadays. You got to make sure that they're looking at the carbon footprint. They're looking at the point of generation. I don't know if it's going to be hydroelectric. I don't know if it's going to be wind turbines. Didn't really see any full. They didn't really encapsulate the full project as far as what it's entailing from the point of generation. But they do say that they're essentially, this is a foundational step for them to unlocking their campus's full potential and looking to scale it up to 1 gigawatt over time, which is a pretty massive endeavor. And they got a 150 megawatt data center here that's under construction and expected to be ready for service by middle of 2026. And then they hold an option for a third 150 megawatt building. So, basically what you need to know is APLD has a market cap of about 3.7 billion, and they're constructing deals in the tens of billions of dollars now for some major tech companies to help them build their AI data centers. So pretty cool stuff. When it comes to their charts, again, we'll be watching that 1425, see if they can break out above it. That would be more bullish indication. Otherwise, they're kind of consolidating from left to right since August 5th between 1350 and about 1550. And right now they're at $14.12. So if they can't break that 1425, we're looking for a sell down to about 1350 once again. So we'll see how that trend kind of plays out. Johnny says been in since $4. That's excellent. Big move on BBAI. Chris Turbo says thoughts on Veritone AI. We can take a look at it, Chris. Appreciate you. Steven says, when you need the Big Bear to show up at the end of the day, sometimes it does. Yeah, so we could kind of transition over into the Big Bear AI conversation. So, while it comes to data centers, that's a big piece of AI. The other big piece of AI is going to be, there's these different industries that are impacted. So it could be AI for, let's say, phones. You got, like ChatGPT, things like that. But then you got AI for things like, let's say, defense. And in this case, BBAI is building a defense outlook. And so BBAI builds defense, basically technology, and they have this company that specializes in their biometrics. It's a enhanced passenger processing in airports across any environment, and they go in the TSA and they go at the gates, and they have this thing. It scans you. It can identify threats, who you are, where you're coming from, and saves a lot of time on the TSA agents, which we know work so hard. So the TSA agents, a lot of times they're working and they're saying, who is this person, where they come from, does it all match up? This is a biometrics thing that kind of automates that process, and they've been deploying pretty aggressively into more airports than a lot of people might expect. Actually got out into, originally one of the top ones we saw was Denver International Airport, so I've seen it firsthand. So when we look at a stock, we're looking for a good deal. The first piece we look at is the market. So AI market, pretty good. Defense market, they're seeing more spending from the US government. But then that's A. But B, when it comes to looking at the market, it's going to be the real world usage. You could look at a market like NFTs, for example. A lot of money, a lot of cash coming in, a lot of crypto transactions, but the real world usage wasn't there at the time. Maybe it's there in the future. But right now, it wasn't there. And that's why that market kind of collapsed. And so AI right now, we're seeing real world usage on this company. So they're kind of validating that. They've been deploying into John F. Kennedy Airport, Los Angeles, Montreal, Port of Seattle, Chicago. And so from a market perspective and how they're kind of expanding, while the contract deals for putting their tech into these places maybe hasn't been as reflective on the financials. You can see their financials came in with a negative net income, about negative 220 million, revenue of about 32 million. So revenue is kind of like holding steady / flat. They're on track to reach, more than what they've reached year over year in the past. So they're on track to increase their revenue. The net income was negative, which we kind of did some investigative work and found that it wasn't that they were really spending more, which is that they were writing off, different acquisitions, that they had some things on paper that looked like losses, but that they actually came out the quarter with more cash, total assets up to 600 million. So, not the most favorable on the revenue, net income side, pretty negative there. Total assets, you're looking at an increase, which looks pretty good. They got runway with their liabilities about half that size of their assets. And here's the other deal with Big Bear. So we'll take a look at GRR there. Gainer, thanks for tuning in. Appreciate it. When we're looking at, for example, the moves that this company is making, they recently pulled back. So we kind of get the analysis, right? From a news perspective, they've been getting some more infrastructure out there. What does that mean? Well, I mean, I would say if you look at a company like, imagine you're a local electricity company, the company that provides electricity for you locally. They're probably not worried about. They'll probably lose money trying to get their power lines out and into on the properties of people. They would even lose money to get the infrastructure out there so that they can have the infrastructure in place to run their business. And I think the same thing is probably true here with Big Bear. It's like that was kind of their approach. We've seen them go from about $1 a share when we started covering them back here to $10 a share in February. So they've made that run before. By February, they started selling off down to April about $2.36 a share. And they started to push back up into that $8 range recently before selling off on their recent earnings. So they sold off on these recent earnings. So they get back down into about $4.67 from, again, that same level they were at basically here in June, so just about a month and a half ago. And they started to bounce this 467, and then I thought we had more drawings. Maybe that's all we got. Oh, there we go. There, we got some more drawings. So basically, yesterday we went over them. We saw this recovery. We're looking for this recovery of about 10% on Big Bear from about $5.50 up into this $6 range. Today, looks like they did make that recovery. So we see them once again, validate that previous support level at about $5.50. They validated it today. So this was yesterday. We kind of had our projection of about 10% up, and they went ahead and made that move. So we see them not only bounce the 10% since bottom that they saw at their earnings, they've actually recovered here about 31%. So we're seeing, some strong bounces. Why is that? Well, most likely it's, they come in with a negative net income and things like that, and then you don't have the most favorable earnings. That's why they dipped here. In fact, they did some things that weren't too hot on the earnings, like they didn't do a big Q&A at the end like they should have. And then the money side of things, what we saw is we saw millions of dollars kind of pool in after the earnings. So when we were looking at some of the outlook on, for example, BBAI, we can kind of pull it up here. I was just looking on some different intel here, and we're looking at the institutional ownership, and we're looking at some of the buys. This is yesterday we saw State Street come in with some big buys. You got Goldman Sachs came in with some more capital. So big institutions jumping in, buying more. When we see that happen, a lot of times it's like, what are they looking forward to? Most likely what they're looking forward to, and you guys can correct me if I'm wrong if you think it's something else, but most likely what I would imagine they are looking forward to is kind of something that's kind of under the radar. It's a big event. It's a huge event. But a lot of people, maybe don't realize the sheer volume of people that will be coming in and out of these airports. And that's going to be the World Cup and the Olympics. And so they did have a post, actually. You could actually see direct from the government. They were looking for creating the TSA checkpoint of the future. And they just kind of published this back in July and into August, that they were looking for a better scale and reduced reliance on manual labor, and to basically make the screening a lot better and faster, and basically use of automation and robots to assist with passenger and baggage handling, which is a pretty bold ask from the government. But what that means is most likely we're going to see there's going to be contractors, there's going to be companies that come in and are those main companies. And then shortly after, we see this LinkedIn post, which basically they say, with mega events like the 2026 FIFA World Cup, and this is directly from Big Bear, and the 2028 Olympics, both coming to America in the next couple of years, leaders across the government and industry have a rare opportunity to advance the national security and elevate the traveler experience. And I mean, as somebody that has my wife is from Argentina, so I have an experience of going into the U.S., and she knows as well as me that it's not too easy. Like, she's got her green card and she's totally she is legal, but it's still like a headache sometimes coming in and out of the US, and most likely you would see some more innovation there from the US. And so Big Bear is kind of eyeing those big mega events here, and they're looking for that to maybe fuel some of their growth, along with the big beautiful bill that we saw get passed. So now that we're seeing, Big Bear here, simply we're going to look at this $6 range. We're going to see if they can hold that $6 resistance. This would now be acting as a support here. So kind of just progressing from where we've gone over the last day or so. The next kind of level we would be watching closely is a smaller level. It's this kind of previous support consolidation. It's this previous support right here, previous support right here. And it's a range that we'd like to see them step up into, which is this price point around $6.50. So it's about a 5% swing up into that level. And ultimately, for them to keep it, we got to see that previous resistance act as a support. So seeing that $6 level now become more of a support level would be kind of the bullish outlook there for Big Bear. But what do we expect? Well, that's what we're going to watch here. That's kind of the level we would imagine would be what we'd want to watch on Monday. And most likely we'll have some pretty good idea of the direction once the market opens on Monday. But what we do have is this 10% move that did take place today that we were looking at and kind of looking for. And now it's, if we see them get rejected, okay, they got another support at 550 that we can watch. If they can't hold that $6 range, so a little bit better position than they were in over the last few days as they're back up into that $6 range. So we're going to be watching there, see if they can hold it. Any short-term positions that we add most likely will, if they do happen at market open. And again, when it comes to their level that they're at right now, the $6 range, what you look for is if it's bearish or if we're not seeing the momentum hold, they're going to get rejected here, sell down to this 550. If we're bullish, we're really starting to see them hold this level. This $6 range is now going to be their support. That's kind of how it looks. Got it. So there's some other companies that we had some analysis for. Two Brothers says, hopefully I didn't miss the APLD technical analysis. You did just miss it, but let me jump in for you and show you what it looks like. They have had some really nice runs up to previous highs. We're not touching any of our long-term positions. We took a trade, we're up about 49% on APLD, but what we're looking for here is a resistance level at about $15 a share where they're consolidating with a support at $13.50. They are bouncing that $13.50. The overall trend within this consolidation is down. So it's going from left to right, support and resistance, but there's also this downtrend happening. And so we're looking for them to potentially break out of it. So you watch that 14.25. If they break out of 14.25, we're looking more bullish up into that 15.50. But if they don't break 14.25, they get rejected. Can't make it there. Next support level at 13.50. Hopefully that's helpful. That was kind of the whole technical analysis there. Now, the other company that we had that we really wanted to go over was actually some space tech stocks. Really wanted to jump in really quick. Head on over to our space tech watch list. We saw some movement. We traded Lunar a few times this week. Didn't really have any luck on that stock. We had Cooler, KULR. In fact, Lunar stock we traded twice this week. Both times we managed risk, and those were in our market live sessions. Ended up losing 2% per trade there. We were looking for what was about a 10-15% trade on Lunar. They've had some good deals come in. Redwire was another one we were looking for recovery. They've had some trouble recovering after the recent earnings, and we're going to be watching them too. But really what we're really focusing on was the Redwire potential recovery there, and watching on BlackSky too, because we got BlackSky, we got some positions there. And then definitely we're going to be looking more at Rocket Lab as they're kind of holding that $40 range at all-time highs. Johnny says, hopefully Redwire, Planet Labs. Russ says Planet Labs. I'd love to take a little deeper look at Planet Labs as well. So Russ, what are you looking at with Planet Labs? I'm curious. One of our members in Stockmate that I've been working with is someone that works at Planet Labs. They're a software engineer, or maybe they're in the manufacturing side of things. So they're looking. They actually have some things working in their favor. They got these resistance levels, kind of maybe acting as a support, trying to make these runs. This kind of, on one hand, they could be, you know, overbought, RSI MACD kind of over on that overbought side maybe, but they are kind of in between levels right now. So from a technical perspective, there's a few things to watch. Kind of see this. Let's see. Get it down to an hour time frame, get a better idea of the short term. Yeah, so I mean, they got this resistance level they're trying to kind of hold and keep bullish. That would be, you know, every time we see a new level reached, we're looking for them to validate the previous resistance as a support. That's more of a bullish momentum play. But also what we got here is this kind of trend they've been in. It's kind of a hyper bull trend, something like this. They're trying to make this run back up into that $7.50 range, up into $8 a share. Now, when it comes to kind of the overall trend, though, we see them kind of trending upwards. We see this trend here. There's also a few other things to watch on the technicals, right? One thing we got too is you got this resistance level, resistance acting as a support here. It's almost like this downtrend where we can see them sell down in this $550 range. A lot of things to look at from a technical perspective. I would imagine right now it's probably erring on the side of that, what we just kind of mapped out from a institutional viewpoint. But let's take a look at their financials. So PL stock. Take a look at it. How's everybody doing this afternoon? Appreciate you. Two Brothers says, thanks, Will. You are the GOAT. Man, I'm just here to help. You know, I mean, when stocks pull back, you know, a lot of people, so easy, you know, just roll over or whatever. But I mean, that's what makes a really good story about a stock. You know, I think that whenever people like get a pullback, something in their portfolio, a lot of times they can feel defeated. But I'm like, those are the times when you see a pullback, like those are the opportunities that you have to show that you could do it, that you could recover, that you can make gains. And I think it's really important, like for anybody that's, you know, the pullbacks are like literally part of the game. Like that's where the money is oftentimes made. And so I feel like there's, on one hand, it's like it's a struggle, and like there is, you know, there's, you know, what you gotta motivate yourself almost when you're looking at pullbacks, things like that. But how many of you guys are like, man, this is a pullback and it like hurts, but gosh, what an opportunity to buy? And I feel like that happens a lot, and that's kind of where we gotta, if you don't take advantage of it, I mean, what happens? Like the worst case scenario, you're exactly where you were before. Totally. So let's take a look here. We got Planet Labs has been coming in with around $60 million in revenue. Seems like they're increasing their revenue pretty consistently, up to about $250 million in the last quarter. There was a few usages I saw in real world usage of their satellites. We see their total assets surging up to 650. A little bit of a decline since 2022 there, but overall they've been holding pretty strong. Planet Labs. I'll have to bring in, I think it's Hong, who's a Stockmate member who works at Planet Labs. Would love to hear what he has to say about it. So they're global vigilance for defense, aircraft detection. So they do aircraft detection. This is actually a really similar outlook. You can kind of see the, maybe I could pull up the image here. Can you guys see that image? See this image? It's like it's tracking all of the planes, broad area management, and they're using some technology to basically see I don't know if there's any more images, but they're basically being able to see like, different. This is London Heathrow, for example. They're looking at all the airports, they're seeing the movement. I think the same thing is true because they're kind of working with the real time. It's an AI powered solution. They're right there right now. Their market cap's at about $2 billion, but they're very similar to that of BlackSky. BlackSky is also in the space tech industry. Same deal. I mean, we're really in BlackSky. Been covering it for a while. You can see we got a position there that's up about 39%. At one point, we were up about 100%. And you can see, $642 million for BlackSky. And BlackSky really specializes in the same thing. They're doing like the AI-powered vision of boats here. And if you really look at it, it's like almost the same as Planet Labs. You see them, they got the view of, for example, what is that? Planes. So same deal, same exact deal. And they're like a quarter of that of the market cap of Planet Labs. So I do like that play. And I feel like almost BlackSky is like this sleeper that could be, a $2 billion company or kind of get into that same range as Planet Labs. Now, you guys let me know what you think. That makes sense. Yeah. Yeah, definitely. So they had a earnings drop there happen, BlackSky. And so we'll watch Planet Labs. Really, they got a support here. We're kind of looking for them to continue up into this 750 range. But again, if they get pulled back below 650, kind of just be ready for that pullback down to 550. Long term, I think it's a great company. I like to see it. Short term, just kind of looking at the levels, looking on a little bit more on the overbought side. See that overextension up kind of near all-time highs. It's fine to trade short term. Just make sure you have a plan together. And then when we jump into BlackSky, so that's going to be BKSY. We're kind of looking for this. Looks like last time we were watching them, they were selling down, they were selling down, they were selling down, and we were looking for them to validate this support at 1680 and then make this run up into $20. And they have consolidated and started to lift off a little bit, kind of getting some momentum potentially to break above this 200-day moving average. So the green line, you see they're kind of acting as resistance. Even the blue EMA, that exponential moving average, struggling for them to like break above it. When they're bullish, it's kind of the opposite. That green line is now kind of acting as a support, more or less. They're holding above that blue line, and it's that EMA. So the simple moving average, more of a support. The exponential is more of a support. And that's kind of where we're watching right now. It's like they're pressing up on that 200-day moving average, that green line, the simple moving average, trying to break above that EMA and break out of what is kind of a little bit of a downtrend they've had since that high of $28. So they're at a strong support there around $17, and they are trying to make this run up into that $20 range. So we're kind of following it. We're seeing if they can do it right now. They're kind of breaking out potentially. So we're kind of watching it there. The other, possibility though is that we have something like this, kind of this right here, and that's the trend, and we see them, push down. So I don't want to pull the trigger too early on adding to the position, but we'll keep our long-term positions with BlackSky right now, and continue to look for those opportunities to trade some of the short-term swings. We were able to trade some really nice swings on BlackSky when it was making its runs up to about $30 a share. So really dynamic stock. It's been moving. It's been kind of correcting down. So kind of seeing it potentially break out here, and high level of market support right now, as we mentioned. Their financials, they're around 642 million, and they have less revenue than Planet Labs. But they do have the revenue is increasing year over year. You see the revenue really ramping up, and then you see the balance sheet looks okay. They got more assets there than liabilities. So we'll be watching there with BlackSky. Okay, so let's see. Monterode says, how will Trump's semiconductor 300% tariffs affect APLD? I mean, APLD doesn't manufacture semiconductors. it would mean that the margins would close down a little bit on the semiconductor, the data center build. People that want to get their data center built will find it to be more expensive. But as far as, this is the funny thing that people don't really realize. While there is like more tariffs on semiconductors, there's also like just as much more incentives that have been given to big tech to move their manufacturing into the US. So when they move their manufacturing into the US, they get like an insane amount of write-off, and most likely would be more or less an offset. And also the semiconductors, you see some manufacturing starting to happen in the US for semiconductors. And that would most likely eliminate many of the tariffs, and you would see more of the raw materials, more or less, coming to the US, which then the semiconductors wouldn't face that tariff as much. If that makes sense. So that would be more the route that big tech is going. Now, when it comes to like APLD, though, Rich says APLD, the power demand is not going away. Yeah, and that's why we like it as a long-term play. Tanet says, may Supermicro get impacted? Supermicro also, once again, does not manufacture semiconductors. To my knowledge, they are a company that specializes in the housing for the semiconductors. So for example, like some people think Supermicro makes computers. But basically, like, here's an example. They're working with Elon's company, XAI. They also work with NVIDIA. They work with AMD. But Supermicro, for example, like, these are the housing units. They build these housing units that have liquid-cooled capabilities. Liquid-cooled AI supercluster designed to take AI's Grok AI to another level for today's infrastructure. So a lot of people think they are, building GPUs. They don't build GPUs. See, look, liquid cooling for example, 32 NVIDIA HGX H100s, H200s, 8 GPUs, 4U liquid cooling systems. So a tariff could affect, for example, like NVIDIA or AMD or like some company they're working with, but most likely, like, again, those companies are seeing some of the benefits of building more in the US, which could offset. And then also you have like margins could decrease slightly, which we've already kind of seen play out. But that also is a motivation in computations to get their computers more efficient. For example, like now you could have a QPU or GPU, excuse me, that's the size of this notebook, that like you would have to have like 100 computers taking up an entire New York City block like 30 years ago. But like today, it's like the size of this notebook. So while that electricity, this reduces electricity cost, they'll most likely see, as long as they're providing value, which they are, 40% reduction, they'll see more of a demand, Supermicro for their technology. And there's also some other companies we kind of went over in our top 5 data center companies that we did a while back, about 3 days ago, where we kind of went over some different companies that we're building. Dorian Coleman says Supermicro not making money at the moment. Well, nobody makes money. The only people that make money live in the mint. Federal Reserve. Right? We have to earn money. All right, market cap 27 billion. I mean, they got revenue of $5.7 billion in revenue with a net income positive of $195 million. So I'd say they're making money, my friend. Where did that come up that you say they're not making money? But you're right, actually. They aren't making money. They're earning money. Nobody makes money except for the Federal Reserve. I love it. All right, so the other one I wanted to get a review of here, WULF. They got a really big surge recently, so I'm going to be careful because oftentimes what follows a massive rally is going to be a massive correction. We were covering it, I think it was yesterday, it was at about $7, and we are saying maybe it could push up to this high of $9 a share, 23% more, and it actually did, so that's funny. It did, but now it's at a resistance. It's let's kind of look at the company in general. You see it skyrocket straight up, basically RSI, MACD, everything pointing to an overextension and an overbought moment where it should be selling down. But we could take a look at the stock. I believe it was a new deal they got with Google. Is that right? Yeah, so Google backed them for AI hosting. And I believe $3.7 billion data center deal. Revenues around $40 million a quarter. Excuse me. And then you have a little bit of a surge in assets, but their liability is still really high. But most likely, if they see more investments from Google, for example, probably see that total asset sheet bounce up to above $1 billion. Market cap $3.5 billion. For their revenues and what we see, I mean, they're a very similar play to, for example, like APLD. APLD has around the same amount of revenue, and let's see the balance sheet. A much better balance sheet, and they're at $3.7 billion market cap. And this company, kind of same deal. I believe they actually work in data centers as well, if I'm not mistaken. Let me just double check. Yeah, so they work in kind of like Bitcoin mining, or could be, I guess, used for AI. Google's investing in them. But personally, like, I think they're going to correct, and when they correct, it's going to be big. It kind of would put them near a valuation that would make more sense for them, kind of in that most likely around a $2 billion market cap, which would put them corrected back down in this $6 range. So I wouldn't touch them personally. But it's great that we see them move. I know, I saw a bunch of, I think Johnny just commented today on the chat. He's a stockmate, that he made a killing. There was some good people, some good comments in Stockmate, where we go live every morning at market open for our live session. And we were trading there, and we had a lot of investors saying, Terawulf, they were making money, and it was great. I'm glad we were able to catch that move. But yeah, now at this point, previous resistance, kind of seeing where it's at. Most likely, I would not advise getting into it, which I don't advise anybody get into any stocks. But personally, I would not touch it. Yeah, that's some funny ones. Then that's like the Federal Reserve. Johnny Bananas says, "Hi, Will. I've been watching for a little while now. Love your no BS input. I've been stacking up on CTM. Any thoughts on their outlook?" Yeah, I got to get going here, but let me do one last breakdown there on CTM for you. Russ says, "I know it's not data or AI, but are you in any PFO destroying companies like SCWO? With the PFA's regulations, the DoD is evaluating companies right now." I am not. But I'd love to learn more, Russ. Thanks for commenting. And if you have any insights on that, by all means, drop them. Appreciate you. Austin Taylor says, "Yo, Will, check out BSWGF. It's a graphene stock, and it's recently been moving." Love it, Taylor. Let me write it down. Appreciate you. How's everybody doing? Feeling better today. I was sick. I started the day sick today. Once we got things going, it was a lot easier. All right, I got it written down there. Appreciate you. All right, thank you, Will, for helping me develop a strategy. Do you find Coreweave attractive around $100? Personally, Coreweave, of course, Dylan, I'm glad you're able to develop the strategy and build out some of your investments. That's what it's all about, my man. Thank you for tuning in. when it comes to Coreweave, I personally don't have positions in the company. But I do like to see some of the indirect plays for it right now. I found that there's just a lot of smaller opportunities that we've been trading quite often that have been really adding up for us. So that's kind of the focus right now. But I appreciate it. Lord Byron says, Will, if you don't have time today to do some research on RZLV, I've done some research on that one. If anyone reading the comments sees this, do a little research yourself on this one. I hope you guys... Yeah, I've done some research on that one. And I believe that it didn't look too bad, resolved, but they had some red flags on their website. And their liabilities are higher than their assets. That's what it was. So I appreciate it, Byron. Thanks for tuning in. But again, we don't invest in companies, even on the short term, that wouldn't be companies we'd want to invest on the long term. And so, for example, like RZLV, if you find something unique about their product that you see them developing, by all means, feel free to invest in. From my perspective, just to give you an idea why I wouldn't invest in it, basically you can see their total assets are on the left, their total liabilities are on the right, and their liabilities are at 57 million, while their assets are at 19 million. So they have a lot more liabilities than assets, which would indicate that if at any time they had to pay back that money, they'd essentially be in a position where they could go bankrupt. So that's why I wouldn't touch them. And they also have kind of just this negative net income of about 80 million a quarter, with revenues only, totaling somewhere in the 10 to $20,000 a month, which is quite small for a company of their size of nearly $1 billion. So right now, wouldn't touch them, but I appreciate it. Thanks so much for tuning in. Chuck says, Will doesn't like RZLV. No, it's not that I don't like them or like them. It's just, from a decision-making perspective, it just doesn't really make sense to buy a company that has more liabilities than assets. I mean, yeah, I kind of buy companies the same way I would want if I was operating the company to look, I guess. That makes sense. All right, so quick thoughts. I'm gonna jump in. I gotta get rolling here, guys, because I got a meeting with our team today. But let me do two more. So the next one we got is I want to search into graphene technology here. Graphene technology refers to an application of graphene, a two-dimensional material with exceptional properties in various technological fields. So this is for electronics, makes it promising for faster and more efficient transistors, potentially revolutionizing electronic devices. I've actually seen AMD use some of this, I believe, in their they were making glass chips. Energy storage. Graphene can be used to enhance the performance of batteries, supercapacitors, and enabling faster charging and higher energy density. Graphene can be incorporated into existing materials to improve their strength, flexibility, and conductivity. So from, just like an overall perspective of where that technology is going, it seems like it's pretty innovative and could potentially make up some of the technological sciences that the way they're going right now could put us in a beautiful position. I mean, we've always said, batteries are getting better, everything's getting better, chips are getting better, and there's certain materials that make it up, and it seems like graphene technology could be one of those. The companies that we see related to this was this one I just wrote down from BSWGF. Stock, Black Swan Graphene. They're a Canadian company, so I can't pull them up on our on the chart where I'm at right now. But I'll tell you, quarterly, where we have their net income negative, doesn't look so hot. Net income negative, but not crazy. We're talking startup right now. Balance sheet, they got a lot of cash though, about $15 million to their $737K, which indicates that they're going to be with $15 million in cash. Excuse me. $15 million in cash, they are looking pretty good from a financial perspective. So they got the runway. When it comes to their chart, again, I can't really jump into it too much. They look overbought on the near term, up to $1.39, but they could be a company that's kind of gaining momentum at their $94 million market cap. They're very small, and potentially could be a top player, it seems, if they are in that market early, as that market's starting to evolve. When it comes to their website and what they offer, you can see they have building the future with Black Swan graphene, and they have this technology that they're working on, and single layer of carbon atoms arranged in a honeycomb-like lattice. It's pretty cool. So it looks like they're based out of Canada, and could potentially be they're partnered with Energizer batteries, which is pretty cool. Concretine, graphene, Florian. So that's pretty cool. Yeah, I mean, it's one to keep an eye on. Right now, the financials, what we see don't quite make sense, but I mean, based on the real world outlook of what they're doing, seems pretty promising. Yeah, absolutely. And then lastly, just want to do a quick review. I got a roll here, but CTM stock. CTM is around $100 million market cap, and they have recently made some of the moves. They kind of started to recover. We saw them try to make this move, but that we have this resistance here. It's been a little bit since we did it at 130. So they're basically pulling out this this market cap build, consolidating a little bit more than we'd like to see. But really what we're looking for here is this gradual market cap build. We started covering them around 80 cents a share, or 50 cents a share. And at one point they were up to $3 a share. They've been really kind of pushing this market cap build up into about $100 a share. And they're looking to find support. Now we've been watching to see if they break pattern or if they can continue. Looks like they've been pretty consistent, and they're looking to get up in that $1.30 range. So the nearest levels to watch right now, they have a support level at $1.10. See it right here, about $1.10 to watch closely. Kind of sold down a little bit. So if they start to break below, let's say $1.10 down to this level, things not looking so hot for them as far as their pattern, kind of consolidating more than we'd like to see. And we could potentially have to adjust some targets. Right now, if they find support at that $1.10 range, they're looking for this push up into $1.27 to $1.50, which is a 10% to 20% margin for profit. So that's kind of how we do it. I got some long-term positions that I bought on CTM. You might say, why would you buy CTM? From a financial perspective, they've had really good financials. They came in with more revenue actually in their last quarter, with net income almost zero. They've been increasing their revenues every quarter. Annually, they've seen increasing revenues. Not any big negative net income quarters. Their balance sheet has been increasing. They jumped their assets to 43 million, and their total liabilities are now down to 11 million. So assets are up 47% year over year, and their liabilities are down 32% year over year. So really good change. They also increased their net income by 82%, which indicates the profit margins are going up, and EBITDA is up about 98% there. So we follow them closely because they work in cybersecurity. So overall, I would say from the news perspective, they look pretty good. They've had some public share offering. They also teamed up with Coreweave recently to do agentic AI for the government. These are the type of cutting edge deals that we like to see with CTM that could potentially put them into a new category of software tech for government customers. So right now they got about $100 million deal with Naval Air. So their market cap's around 100 million. So really good growth there. So I appreciate you all. Thanks so much for tuning in. That's kind of the breakdown for CTM. We're going to look for that margin for profit here up to about 10% margin. I am in CTM right now, and we're watching that $1.10 support there. If you guys want to watch our daily live trading sessions, they're happening tomorrow at market open. And right now we have a really unique sale for Stockmates. Not only do you get a free t-shirts when you join Stockmates, but you get a free pre-order of the new book that I'm coming out with. This new book goes into mapping out your financial strategy, your trades, your short-term, medium-term, and long-term investments, and it's going into managing budgets, looking for plays, and investing your money smart, not just in stocks, but basically how we do it, whether it's the real estate we do or allocating certain levels into crypto. Right now, when you enroll in StockMate, you actually get access to our new book that we're coming out with. It's going to be called Map Out Your Money, which is super exciting. I'm excited to get it out to you. And if you ever wanted to really get some more systems, again, not tomorrow, as Rich says, but Monday at market open, you can watch us trade live. You can see our entries, see our exits, get cutting edge analysis on the top AI stocks, robotic stocks. We're definitely going into quantum and drone tech, defense stocks. You can see it all inside of StockMate and get our targets for the upcoming week. So we got our live trading Monday through Friday. There's our schedule there. We also have the targets for the different companies, when they're reporting earnings and all that good stuff. So you can see pre-market, after hours, as well as get access to any new trades that we take in the markets. You can see how we do it short-term and long-term. So if you want to surround yourself with like-minded individuals, get that free t-shirt and access to the book when it comes out early, then I encourage you to simply check out the second link down below for StockMates. Thanks so much for joining, guys. Appreciate you all. Getting that sales lasting just through the weekend. So if you want to take advantage of it, there's a special code for you when you click the second link below. Appreciate you all. Again, fire your thumbs up, smash the like button, and I'll see you in the next one. Take care.